Welcome to ShortView Trading. This is your morning market hit for Thursday, the 16th of April. What matters today for traders? Well, markets were weak yesterday, particularly in Europe, but also in the US, where the S&P traded down over 2%. The S&P has now been struggling at its 50-day Fibonacci retracement ratio, whilst the Nasdaq is at around its 61.8% ratio. With that, the key question becomes, are markets rolling over, or are they merely consolidating gains before a next move higher? In that respect, it's interesting to note the behaviour of bond yields yesterday. US 10-year bond yields were weak, trading off 9-10 basis points, closing at 63 basis points on the session. That's not far above their all-time low reached on the 9th of March at 54 basis points, and a clear indication of the bond market talking about sogginess in the macro outlook, i.e. in contrast to the relief rally that we've seen in the equity market. With that, banks were also weak following reports from a number of the major banks over the last two trading sessions, and of course banks trading down in line with that US 10-year bond yield. So banks aren't confirming the message of the equity market more broadly, that is the message of the rally of the last few weeks, added to which the Russell again underperformed. And indeed, as you can see in the chart in front of you now, high beta, small and mid cap indices have all been underperforming over the last few trading sessions. That's normally an indication that the S&P should be rolling. And of course, with that Russell underperformance, US high yield spreads actually widened again yesterday, despite that Fed backstop that was put in place on Thursday last week. Also of interest, that more marked weakness we saw in the Eurozone, where indices were down 3.5–4% largely across the board. That weakness was accompanied by a widening again of some of the peripheral bond spreads. Italian, Spanish and other bond spreads widened again yesterday on the session, as there was no further significant clarification on debt mutualization in the Eurozone. So risks are clearly rising, added to which our models are rolling over from sell levels. They've just been generating sell signals. The risk appetite scoring system, as you see now in front of you, has been rolling over from sell. The technical scoring system remains at around sell, and there's still an absence of downside put protection, i.e. complacency in portfolios in that respect. So our preference remains to play the downside here on a 1 to 2 week view. For the full detail of how we're doing that, please see today's Daily Rag, available to subscribers and on the website. So what are we watching today? Well, the usual things that we've been mentioning. Any more policy announcements, either fiscal or monetary, any signs of easing or tightening stress in the financial system, and of course the price action and how it plays out from here. But over and above that, there's some key macro data out today, including the US Philly Fed later on this afternoon in London. That's an April data point. And of course, it's also jobless claims, weekly jobless claims out, 1:30 London time. That's been a key source of interest to economists and market participants as we've watched that rise dramatically over recent weeks. Elsewhere, there's a bunch of speeches from many Fed governors, including Williams from the New York Fed. And finally, we've got more US first quarter earnings reports coming out over the course of the session, including Blackrock and Morgan Stanley. So that was your morning market hit for Thursday, the 16th of April. Thank you for listening. Please do subscribe on YouTube, LinkedIn, Facebook, and or Twitter. Thank you and stay safe.